UK government borrowing in October exceeds expectations at PS 17.4b. So yeah, the UK government borrowed a lot more than expected in October, PS 17.4 billion to be exact. This is actually the second highest October figure since records began in 1993, which is kind of a big deal. Economists were predicting about P 17.3 billion, so this is way over what anyone anticipated. It's also up from the P 17 billion borrowed in September, which means things are looking a bit tighter financially. The Office for National Statistics Sansalvi pointed out that public sector net borrowing for October was P.6 billion, higher than it was last year. And what's even more worrying is that debt interest payments have shot up, with the UK now paying P.1 billion in interest for October, the highest October figure on record. Yeah, that's a lot. Alex Kerr, an economist at Capital Economics, called these numbers disappointing, and I totally get why. It's clear the government is facing some tough challenges, while Chancellor Rachel Reeves has downplayed the idea of raising taxes. Kerr pointed out that if she wants to increase public spending in the future, taxes might have to go up. And that's probably going to be a tough sell. There's also a little wrinkle in the tax receipts situation. The ONS had expected a drop in tax receipts after cutting national insurance contributions, but that didn't really happen. In fact, public spending, including things like benefits and debt interest, has gone up more than revenue, which means the budget is still in the red. One of the main reasons for the rise in debt payments is the Retail Prices Index, RPI, which sets the interest rates on government bonds. As inflation goes up, so does the cost of repaying these bonds. So that's a bit of a double whammy for the government. Now, Darren Jones, the chief secretary to the Treasury, defended the government's actions, saying they inherited a P122 billion gap from the previous administration. He mentioned that the budget had addressed some of those issues and laid the groundwork for a more sustainable financial future. I see what he's saying, but the numbers don't lie, and things are still looking tough. Matt Swanell, the chief economic advisor to the II Titum Club, also weighed in, saying fiscal policy is likely to keep tightening over the next few years. He also warned that the Chancellor might be running out of room to play around with her fiscal targets. If interest rates stay high, there's going to be even less wiggle room to hit those goals. Yeah, it's clear the UK's borrowing situation isn't looking great right now. The government will need to make some tough choices ahead if they want to get the finances back on track, and that could include raising taxes. That could include raising taxes on the military, and that could include raising taxes on everyone, the employees as well. The American people are scared, but the more this all plays out, the more the military in enforcing domestic laws.